whether the BBI, of course, will survive or not. There's a very interesting editorial cartoon, and also this will bring me to the close of a discussion with a topic that is very pivotal that has been drawn today in the Daily Nation. There you have it, and you have the gavel there that is, of course, looking at that particular grave. You can see a hand jutting out from the grave there. That is the skeleton of the arm there, BBI. Born once, died twice, resurrected is a probing question, and we can see also some of the judges are, going away there with the spades, right? But how will it pan out today? But the biggest question that also people are asking: will the judges just throw out the BBI, wholesale, the royalties, or their good, proposal inside there that we can keep, and of course do away with the proposal that they think will not really pass muster at the end of the day? That is what we'll be looking at, or how it will pan out from the courts. But primarily, and this I come to you, Bunyase Sakwa, we know today also is a big day in the Senate. The National Assembly passed the Division of Revenue bill. And this also has some issues with the Senate. First of all, because they say that division of revenue, we know it's big in the BBI. They are saying, oh, we'll expand that particular share to the counties to 35%, right, from the current 15%. That should be the lowest threshold, and put it at 35%. It is a big issue today in the Senate, because one, they say the Senate are not really sanguine and optimistic that are going to pass this division of revenue bill, because there is a matter pending in court regarding the grants bill as well that has to be first streamlined before you go on with the division of revenue bill. I'm given to understand from my sources that also MPs senators are being paid 200,000 shillings to make sure that this division of revenue bill passes today. I don't know if you're privy to this, but bribery is happening in the House from reliable sources.
Oh, I wish I had that 200,000 now, but
no, there is 200,000 there. Of course, you're not a senator, but senators are going to get that tidy sum of money.
There are big stakes, because you remember a couple of years ago, where there was this embarrassing situation in passing that division of revenue, because Senate couldn't agree on the funding formula. This 1 man, 1 shilling, set up very complex things. It was then decided that we will not go read the budget, the finance bill, becomes Finance Act, until the division of revenue has been agreed. And now it means that if this is not agreed, then we can't even read the budget. We have to wait until this is decided, and then the finance bill can come in after this thing is agreed, rather than throwing them into the future, broadly like that. I don't know who would be paying whom, any amount of money to pass this, in whose interest. Who has that kind of money just sitting somewhere to induce, to lobby, let's put it that way, to lobby the passage of the division of revenue. The division of revenue has its own intrinsic challenges, and indeed, if we want to truly be more responsive to the counties, we do not need BBI to do that at this moment particularly. It could be demonstrated through these processes by simply vacating space in the budget on some items to allow for the resources, to increase the resources that then would go to fund the counties. One, and two, they would change the formula in such a way that it's not the last audited account. For example, now the base that we are using is 1718 or 1819. I think it's 1819. That's 3 years old. It's the last audited revenue, they say, ordinary revenue. That's the basis, that's the denominator on which we get the 15% or the 35% and so on. We could bring that to be more current to last year, the last financial year. You can get just that bit audited, so that we are dealing with a denominator that is no older than about a year. There was a time when the denominator was 5 years old. And so these numbers don't mean as much as they appear ordinary. And some people think that we're talking about 15 to 35% of the budget. It isn't. It is ordinary revenue. It's just that slice of it. And that a government can do without waiting. There's no law that needs to be changed now. I think they could say, hey, we have done it. and we can sustain it there. Now, if you want to pass the BBI to make sure it remains there, you can do that so that the flow is defined. But it's not a matter that requires any legal changes to move from 15% to 35% or some such higher figure or a progressive figure. It all depends on the ability to vacate expenditure so that you can now move more money to the counties by denying some funding at the national level. You can't do both of them at the same time because the cake is not growing that fast. Yeah. So there's some realism in this whole thing that sometimes we tend to forget, and we are hiding behind the need to pass this as we delay time. But if there was a real will to go in that direction, I think we could do it. But I know that difficult. Difficult is where do you cut back to increase what? That's the real thing. We want more of both. And there are no resources to do more of both. Even if we had Turkana oil flowing like there's no tomorrow, we would still have a whole host of new things that we have not been funding. And that money will not easily be available to transfer to counties. I conclude by saying Kenyans must realize, and we leaders must also know, that Kenya is 47 counties. Kenya is 47 counties. So money that goes to the counties is still in Kenya. And it's going to the to governments, particularly the rural government, but also in the urban governments like Nairobi and so on, who are dealing with the ultra poor, where the delivery of services at the margin is really problematic in health, in education, where the quality of infrastructure is not the Gorofa roads, where it's seeing tarmac at all and so on. Those are areas that require development. And when they grow, the rest of the economy grows. When they last did an estimate of county GDPs, call them that, the county that was growing the fastest was Elgeyo Marakwet. People may be looking at, they didn't expect that. And I told myself, if Elgeyo Marakwet had managed as they did, a double-digit growth, and if we got half our counties growing a double-digit, so would our national economy. That's where our people are.
Thank you.
Yeah.
Well, let me hear from Bill Okero on this, because it seems and it appears this particular money that is being doled out is because there is bugbears and fears that if at all the senators do not really pass this particular, of course, the Division of Revenue bill today, the budget estimates will not be read because there's a court case. But I want to just understand the public finance bill with the grants bill that the senators are pushing for, and we have senators now who are being bribed with 200,000 shillings. What sort of custodians are they for when we're talking about devolution and we're talking about the county governments? Briefly.
Yeah. First of all, I think Parliament, like every other institution in this country, is not immune to corruption, and the executive would pay members of Parliament to get that bill passed, so that the budget can be read. This definitely will happen. I mean, the government is desperate to make sure that this budget is passed now. Budget is raised. Now, they say, the British would say that the proof of the pudding is in the eating. I really like the senators who are pushing for the 495 billion, because what they are doing is they are holding the BBI proponents to their word. If in fact you say you will give 35%, fine, okay, let's move it from 370 to 495 and approve it now. I mean, if you can't do it now, you can't do it next year, and you need to do it now so that if the BBI is endorsed by Supreme Court, then it can be implemented. But let me tell you, if you read the same paper, in the middle pages you will see the Council of Governors raising concern that they are in areas by 60 billion because Treasury is not able to disburse money for January and February to the counties. So the reality is the revenues of the government, the 3.3 trillion budget, would not be sufficient for them to disburse more than the 15-20% they are getting now. And so, of course, the 35 is just a sweetener to get the BBI, passed, as I mentioned earlier. But I think it would really be sad, although it will happen, if the senators would accept this bribe that they are given and endorse something that they know in their conscience that is not right. And, and it would really be unfortunate. But it has happened before. Every law that has been passed, particularly in National Assembly, that has been notorious for these bribes. And it's really unfortunate. And we've seen it in all the things that have happened, the impeachment of some of the senators who are opposed to government, the passing of the tax, on VAT, remember, on petroleum. You've seen on the discussions on where the certain members of Senate were also de-whipped for not supporting the pro-handshake, whatever. In all of them, there have been indications, or there have been very strong, indications that money changed hands and people were influenced, senators were influenced. And so I'm not going to be surprised if senators, those ones who are now opposed to it, will tomorrow vote for the same bill that they are putting to reject it. We have seen it before, and it will happen.
It will happen. All right. I just want to release all of you because, first of all, I think I've extended my time today with you without your permission, but my apologies. And in light of what is happening today, I think it was pivotal also to just discuss a bit of Division of Revenue bill. My colleague, Dan Karuki, is standing by, but before I go there, I just want to also give you closing remarks so that we can go to him. I know he'll take a tidy sum of money. I mean, not money. We're talking about money today. Time, I should say. So I don't want to be keeping you here so that we can actually release you and then we go over to him. So let's just get to your closing remarks. You've not really weighed in on the Division of Revenue bill, McPhee.
Well, the point here is, so often in Kenya we don't understand that what I do affects you. In other words, let's look at the numbers. Let's look at the income of the Kenya government. The biggest single item is interest on our borrowing. The second biggest item is the amount of money that goes to the counties. The third biggest item is what is paid in the salaries to our secondary and primary school teachers, government teachers. But now, if you're going to increase that number, you're going to increase the deficit. And if you increase the deficit, we're back to more borrowing. So, let us be responsible men and women. Let us not be irresponsible children who don't know where the money is coming from. The money is coming from the people of Kenya. If you want more money in the counties, are you now going to have education as something which is run by the counties? Health is in a mess. Why? Because it's run by the counties. So, let's be realistic and let's think about the future of our country. Let us not just think about, 200,000 shillings is what a senator would leave as a tip in a hotel because he got so much money. So let's be responsible people. Let's think about Kenya, because this money, if you want more money in the counties, we will have a bigger deficit. And this is the reality on the ground.
Thank you.
Let's not try to put our heads into the soil like the proverbial, cuckoo.
Thank you.
I don't have much to add now. I just, my hope is that we will allow institutions to work. And even if there is a crisis by delaying the passing of the revenue bill, let us go into negotiation and discussion so that we resolve issues in ways that in the future things will be done more easily. We sometimes rush to get short-term, a quick fix, and then every year we are back in the same pot. I also hope that whatever comes out with the BBI, it will be an advancement in our institutional capacity as a country. I think that's always healthy. Sometimes there's too much passion in these things to allow for reasoned thinking. I liked your discussion today on the banks and banks' earnings. I think that's an area we should really focus on from a public policy perspective. Not to curb it, let us just understand it. And we'll sometimes be surprised by who benefits from this. But there are many issues and lessons without prejudging it.
Thank you.
That we can look at.
Right, thank you. Let's hear from Bill Okero, your closing remarks, sir.
Yeah, for me, I think I want to urge our banks, to strongly, pursue credit to the private sector, and in particular to SMEs. I think this is critical. This is a country that is still, you've heard the reports that SMEs are still performing very badly. Over 35% of them have not recovered from COVID crisis. And I'm actually, if you look at DIBAL, the report by Equity Bank, their total lending was about 500 billion compared to their deposit of almost 957, I think, billion. So that is a lending to loans to deposit ratio of about 45, 47. Let me tell you, they can enhance that loan book up to 80% in a developing country. That's normal. It means there's still room for those guys to lend to the private sector. Even in developed countries like US, the average ratio for lending to deposits, it's about 60%, even for countries like US. So I think there's room for our banks to support the economy, particularly those products are not focused on risks. And because if you focus on risks, then you're looking at only your bottom line, and you're not looking at really the larger interest of the nation. And I want to urge the central bank to really focus on that and get the banks to also support the economy.
Thank you. All right, thank you very much, Bill Okero.